Now, with the foreign exchange markets in view, let's get the risk event for the week starting Monday, the 30th of November, off now to Daily FX. And joining us there is Daniela Sabin. Daniela, good morning to you. What are you looking at next week?
Good morning, Jerry. So I'm focusing mainly in the RBA policy meeting we've got next Tuesday. It's quite interesting because it's going to be the first of the major central banks to do a policy meeting since we've seen these vaccine news kind of support markets higher and see this significant push higher in the month of November. We're not expecting much change in terms of the rate. In fact, we've seen the Deputy Governor, Guy Debelle, as early as this week, warn the government not to remove fiscal stimulus too early and also reiterate that the central bank's unlikely to raise rates for the next 3 years. So not much expected in terms of the actual rate, expected to be unchanged at 0.1%. In fact, if we look at markets, we see implied probabilities signaling that we're not expecting a rate hike at least until the end of 2021, which is mostly in line with what the central bank is telling us. But I still think it'll be interesting to see if this stance remains very dovish or more dovish with this vaccine news, or if that's mentioned at all in their statement, because it is something that markets are looking for nowadays, is to see any mention of vaccine and vaccine hopes going forward for 2021 projections. If we're looking at something, I'm looking at the Aussie-Kiwi pair. We've got the chart here. This is a weekly chart. And what I think is very interesting is even though they're both currencies that are supported by risk on sentiment, there has been a divergence with the central bank policies and central bank rhetoric in the last few weeks. In fact, we saw the Reserve Bank of New Zealand just recently mention that they were going to include house prices in their remit. And what this does, it kind of reduces the need to cut rates and even to consider negative rates. So obviously New Zealand yields are up. On the other term, we've seen the Australian bank be a little bit more dovish. This has got yields down. So we've got this divergence where Australian yields are slightly below New Zealand yields. And I think this is going to be supportive of the Kiwi in the short term. Of course, this can change. But looking forward and looking at the chart, we've got this interesting descending channel here, and this has been in place since the peaks we've seen in the summer. I am expecting this to continue. In fact, we saw this week again the price touch the lower edge of the channel. I think an interesting area to look into account is this here, this 105.65 area. If we see the pair push above this, we could see the pair test the upper channel of the upper side of the channel. If not, expect to see continued downside here. The 104 area will definitely be significant. An area of support that I'm looking at is 103.65-ish. I'm expecting to see buyers jumping to the market back here. But for now, I do expect this channel to continue. And next week, I am expecting to see further weakness in the pair, especially based on this yield differential and divergence that we've seen between central banks, if this is how the RBA continues to show a dovish stance next Tuesday.
Okay, Danny, thanks so much indeed. Waiting the RBA decision next week. And that was the risk event of the week to watch out for. And the Aussie Kiwi is the trade to follow.